Well, hi everyone, and welcome to the Buffett and Beyond Research Saturday Stock Market Recap from March 22nd, 2025. And remember, if you want to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And let's get into it, folks. The market is trying to finally have a positive week as I'm recording this about an hour before the close, and it really is trying to form a bottom here. However, there's always a chance of a retest of the recent lows, and folks, it is this test that the traders are really waiting for. Now, our weekly stock analysis video, well, Google came out with some earnings, and they had some upgraded earnings projections for this entire year. It, too, has a new gadget, I say gadget in quotation marks, to add to the AI revolution. In our ETF video, well, our top stocks in our NASDAQ 100 portfolio are hanging tough as the NASDAQ tries to find its footing. It's nice to see our portfolios not fall more than the market, but outperforming by a huge amount on the upside. And folks, we're waiting for that big move. And let us look at the S&P 500. The center line in here is the 20-day moving average, and the top line and the bottom line are volatility bands. And you can see that when they reach a small narrow area in here, it is time for a big move. The problem is that this big move went to the downside and then closed outside this bottom band for several days in a row. But now it has been closing within that band, and it looks like it wants to try to hold this 5,600 level. But that 5,500 level down here is where the previous low was. And the traders really would like to see it down to that 55 level and hold there. And that would be the big test. However, some people are looking at it as the 5,600 level is the level of support in here. And you can see how important that is. And they are saying that we'll get the rally from this point. So it's a fight between those two. Should we rally the market from here or wait till it goes down and actually test this low point right in the market? And that's the question. And you can see this indicator down here, which is made up of two moving averages. This red line is the slow moving average, the blue line the faster moving average. And when the blue line crosses over the red line, that gives us a buy signal. Problem is they are stuck together right here, just as up here everybody is hoping this 5,600 level holds. But we have to see some up movement in order for this indicator to give us a buy signal. So folks, we're going to have to wait till next week and see what happens. And let us look at the S&P 500 again in a little shorter time frame, and we can see that this red line is the 200-day moving average, green line 20-day moving average, blue line 50-day moving average. So we're sitting under all the moving averages is where I'm going with this. And here it is. Are we going to turn around and go down and test? Or is this 5,600 level in here the place where it is going to hold? And so far, all this week, that's what this market did, trying to hold that 5,600 level. And so for this week, really, we could say the market did absolutely nothing, but it didn't go down as it has in this past time frame in here. Oh boy, right? Now, our short-term indicator up here is not giving us a buy signal yet because this point right in here was the low of the market. And we have to see the market make a low again, come back down to this area, and this line up here not go as far down as this level in here. So you can see there's a lot of things happening, and the technicians are just watching this and saying, boy, I don't know, and I'm talking about the traders, I really don't know if we should be in this market or not in the market. But don't forget, they're day-to-day traders. Us full-time investors, we're in the market all the time, and we'll use hedging to stop these downfalls as we have. And we have hedges under this market in case it comes down to here and breaks through to the downside, which we really don't think it will. Now, portfolio protection, the March SPY 500 level is now extinct. And we rolled over on Thursday and bought the SPY 520 put, which is now expensive because it's only about 7 or 8% below the market. But if the market falls another 7 or 8%, we will be protected from there on down just in case anything happens if you're using the SPY puts. Now remember, the SPY represents 1/10 of the S&P 500. So if this is a $150,000 portfolio, we need 3 puts. That's why with this March put expiring, we went out Thursday and bought a June put. So we have 3 puts, which will cover the $150,000 portfolio. So we're all set. We could just watch the market and see what happens. So folks, we had a week where the market is trying to hold its own after weeks of declining. So we're just going to have to wait until next week to see what is going to, or this coming week, what is going to happen. So here we are on the weekend. Go out, take your mind off the market, because it will be here next week or in a couple of days. So remember, if you want to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. Okay, folks, stay safe. Enjoy your family this weekend. We'll see you back here in a couple of days.